Hi, my name is Alina and the topic of my essay is accounting and technology. The first part of the presentation talks about how accounting has changed over time with technology, and the second part talks about the emerging trends and their impact on accounting profession and the accountants. My paper talks about the integration between the field of accounting and technology, the history of accounting, the emergence of CPAs and the auditors, technology in accounting history, recent auditing and relationship management software, technological tools and the equipment that impact the accountants and or the accounting profession, and I'm going to discuss the negative and positive effects very briefly, and the conclusion, which is going to be my recommendation. History of accounting profession. The double entry bookkeeping system was introduced in 1494. The concept was devised by Venetian merchants. The Industrial Revolution and the creation of corporations and multinational firms stipulated the need for advanced cost, accounting, and bookkeeping methods. Accountants today act more like proactive business consultants than the record keepers, as they used to do. Emergence of CPAs and the auditors. During World War II, accountants were required to keep track of the records and act as auditors. The concept of certified public accountants emerged in 1896. The CPA firms provided several partners to Washington war machine that ensured victory and led to the innovations in accounting and auditing profession. The events during World War II led to the need for more accountants to account for the money that was being earned and spent. The need arose to conduct audits of the defense contracts. More revenue was needed because expenditures increased and so more taxes were imposed and collected. Technology in accounting history. The earliest use of an adding machine, the wire and bead abacus, was 2,000 years ago. In 1980, Herman Hollerith invented punch card, a computing technology. Thereafter, the mechanization of tax assessments and collections took place, the electrical operation of cash files took place, and the application and use of machines and electronics in accounting took place. The need to increase the speed, the demand for the accurate results, and time constraints are the factors contributing to the mechanization of tax assessments and collections. This has prevented under and over-assessment of property valuations and favoritism, which in turn prevented unrest and dissatisfaction on the part of the taxpayers, as the Journal of Accountancy talks about. Before the advent of electrical operation of cash files, CPAs were manually filing, sorting, and retrieving data in 1940s. In October 1955, Kermit realized that it was about time that CPAs started using computers developed for scientific and mathematical calculations for their own use. Accounting and relationship management software that exists today. Cloud computing software for bookkeeping, accounting software such as Peachtree, QuickBooks, Sage 50, etc., audit software such as CAT, Blue Chip Standards, Microsoft Office, MS Excel, MS PowerPoint, MS Word, MS Access, Enterprise Resource Planning Software, Supply Chain Management, Customer Relationship Management. ERP software has special accounting module that helps all the people in accounting department to collaborate and efficiently communicate, for instance. The CRM system helps accountants in speeding up their proposal process to the customers. Areas impacted by technology. Accounting regulation first. A move from GAAP to IFRS, labor laws impacted, equity-based crowdfunding, accounting for assets, accounting for liabilities, example capital and operational leases, and green accounting. All areas starting from collection of data, recording, processing, and reporting have been affected. Advent of technology has turned the world into a global village. A move from GAAP to IFRS as companies expanded overseas. Due to emergence of multinational firms, the world is developing into a gig economy, which is the concept generated due to a move from full-time permanent workers to more part-time contractual freelance worker. The existence of technologies such as internet, video conferencing, virtual network, etc. has contributed to the being of gig economy. Equity-based crowdfunding and has encouraged overseas expansion of firms. Equity-based crowdfunding allows unlisted private companies to raise funds through offering shares online and still form a part of capital market. This leads to new reporting and compliance issues, which will require new accounting regulations. As sharing economies become more prevalent, there will be a change in the status of ownership and control, which in turn will require modification to the laws pertaining to assets and liabilities. As the world is becoming aware of the need to protecting the environment, the concept of green accounting has emerged, which has led to the need to devise standards and regulations to perform green accounting. Carbon unit measurement and management tools have been invented. Green accounting software as needed to calculate carbon ratings for the products retailers stock, and carbon accounting programs to calculate taxes based on the amount of energy consumed. Second, data security. The confidentiality of clients' data is being compromised. Techniques such as social engineering, kickbacks, and shell company are leading to information into the hands of the unauthorized personnel. Payment systems. Cash and money orders were the only forms of payments in the past. Advancements in technology introduced other modes, such as direct debit credit card debit cards, check payments, etc. Electronic banking has given rise to e-commerce industry. Increase in the number and the value of fraudulent activities. Impact on the balance sheet assets and liabilities. Accounting software is now being constructed in a way that they are compatible with the e-commerce and e-banking. Entry-level accounting systems are automating links with the bank. It has now become easier to forge checks and perform fraudulent transactions or credit cards. Also, the flexibility in paying credit card balances and time lags in issuing checks and cashing date has caused the long-term versus short-term issue, and the valuation of liabilities. Furthermore, the possibilities of fraud as new technology hits accounting profession leads to newer and stricter regulations. The robotics. Robots are human-like machines programmed to perform tasks. Robots can be used in the industries where accounting is rule-based. It is a system that contains sensor control systems, manipulators, power supplies, and software that work together to perform tasks. They are usually programmed to do work that is boring, dangerous, and requires precision and consistency that is difficult to provide by a human performer. These machines are usually used in capital-intensive industries such as oil mining, manufacturing, oil rigging, etc. The artificial intelligence. Artificial intelligence is a software or machine's capability to behave like a human. So far, only limited intelligence has been fed into machines and software. Siri and Google are good examples of digital personal assistants which respond based on the attributes that they have learned about the users. Accounting systems such as QuickBooks and Sage 50 now perform bank reconciliation processes automatically, a task that required much effort and time earlier on. The Hey Zero chatbot uses the machine learning technology and the transaction data processed in Xero to enable the business's individuals to find the last transactional data, example their debtors, due dates, the bills, the bank balance, and they also recommend suitable bookkeepers in the nearby area. Virtual reality and the augmented reality. Virtual reality enhances the perception of real environment. Accountants are using virtual world Second Life to recruit trainees, attract clients, develop new lines of businesses, organize meetings and online role-playing games, etc. By providing images and sound effects and graphical outlays, virtual reality gives a sense of physical presence while not being physically present. AVR and VR make use of equipment such as wired gloves, head mounts, cameras, etc. This slide talks about if all the above methods are leading to de-skilling of accounting profession, which according to me is not. However, it's shrinking. Now I'm going to discuss briefly the advantages of using technology. Communication with the clients has become more efficient and effective. Work from home opportunities allow more flexibility. There has been a significant fall in the number of visits to the accountant because clients can access their financial information from mobile devices, tablets, etc. MS Office applications have made it efficient to organize, sort, search, and analyze data. Data entry errors have been minimized because of the import feature that exists in many software now. Audit software such as CAD has made reperformance and recalculation less time consuming, lower capital and maintenance costs for the accounting firms. The disadvantages include disturbed work-life balance, Adopting technology is expensive, example, capital and maintenance cost. Threat to privacy and confidentiality, as discussed earlier. Advancement of payment systems has led to increased fraudulent activity, as discussed earlier. And going entirely paperless is risky. If the server crashes or is hit by a virus, accountants will lose important data for a lifetime. This is particularly a pitfall of cloud computing, which has no data held locally and everything is on the server. Now I'm going to conclude my presentation. Accountants need to reskill. With the new technologies such as VR, augmented VR, artificial intelligence, etc., accountants need to continually learn and master new skills. This would help them identify new opportunities for themselves and also guide their clients. They usually refer to their CPAs regarding the pros and cons of new technology that emerges, and CPAs these days not only provide financial accounting advice to their clients, but they also deal with their litigation issues, banking issues, HR issues, etc. Accountants should weigh the costs and benefits of the cloud computing and educate their clients before adopting this work practice. The accounting profession will shrink, as I said. The CFOs will need to master technology as well as their accountancy and finance profession. By 2020, the audits are expected to happen in real time, according to the ACCA Global. According to the ACCA Global, if the accountants will not embrace technology, they will follow the dinosaur into extinction, individually as well as a profession. This last slide here emphasizes the need for the accountants to master technology. As we can see here, this hiring job description states that the person needs to have strong system commands. They should be technologically savvy. Thank you.